But I'm telling you, it's getting harder and harder and harder. And when I talk to the largest distributor in the world, who tells me, well, I don't know exactly what I can get you, I'll get you something. These are things that I've never heard before. When I talk to a different distributor, equally as large or pretty close, who tells me they can't get 1,000-ounce bars until March, two things come to mind. One, it's very, very, very tight. And two, this is a COMEX depository. Makes me feel as though this COMEX depository is bracing for a squeeze here at the end of the month. There's a massive open interest into the end of the month on the 24th, when the delivery month starts for February. They can start taking delivery. Huge open interest. So that's one reason I expect volatility, because remember last year I kept saying one of the big changes was this others reportable group on COMEX that keeps draining the COMEX through taking deliveries. Well, there's huge amount of open interest right now. And I think that the commercial banks are going to try to shake those people free so that they don't stand for delivery. But here again, I think that's where the volatility comes in. But it goes back to the same thing we saw in 2020. A common thread that I've seen for 4 years of big money, huge money, sovereign wealth funds, family offices, commercial banks, and central banks all pulling metal home, taking delivery off of the exchanges, off the Bank of England, off the New York Fed, and off the COMEX. So it starts at the top and trickles all the way down.
This is Donnegan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com. Welcome back to Liberty and Finance. We have a returning guest that we've looked forward to for his weekly market updates and insight into what's going on in the precious metals world. This is Andy Schectman, the CEO of Miles Franklin. He joins us this Wednesday, February 17, 2021. Andy, thanks for coming back on.
Wonderful to see you, Donnegan. Thanks for having me again.
I know we try to keep these weekly market updates really concise and tight, but I couldn't resist the urge to get a few questions from viewers in here along the way. So first, though, we're going to give you a chance to just give us, from this whirlwind, you and I both were relating as we got on the line here, how our phones are blowing up and the demand is still unprecedented in our experience. Mine experience much more limited than yours. So if you could please give us an update on what you're seeing, and you take a broader look out into the supply chain, you take a broader look out into the competitive landscape, the supply and the demand, the trend on the premiums, etc. Tell us what you're seeing in the precious metals world that people need to be aware of.
Thanks, Donnegan. Yeah, we're seeing the highest premium I've ever seen in 31 years of business. We're seeing demand that has expanded, as we've talked about before, well past the choir, deep into the audience, maybe outside into the street. We're seeing people who have never bought precious metals before, and their counsel, their financial advisories, contacting us on a repetitive and continual basis. We're seeing demand that is unprecedented in this industry by a factor of 5 or more. 20-hour days, 7 days a week are not uncommon at all any longer. And the interesting thing is that the supply, I think, has still been okay, but it's getting to the point now where it's getting very, very, very difficult to get. And the prices are the highest I've ever seen. As an example, Silver Eagles, 2021 Silver Eagles. The mint is only stamped and sent out somewhere around 7 million Silver Eagles. The demand for that has got to be 10 times that. And the premiums at $10 an ounce, making us the least expensive in the country at that rate, play evidence to that. The Canadian Maple Leaf, same thing, at $7 an ounce over spot on a special we're going to run here, puts us cheaper than anyone in the country. I've never seen premiums like that But it's important to understand how this works too. Remember that the distributors who are receiving these allocations from the mints who are really somewhat the model of inefficiency. They're pumping out coins at a snail's pace when the demand is off the charts. And so the distributors have a dilemma. The big distributors, they have a dilemma of they have so much demand and not a lot of supply, so they raise premiums. And the same thing goes if people were going to be selling coins back to us, super high premiums. The question becomes what happens when the distributors run out of product? Because there is no one in the industry selling back to us. The secondary market is not selling back to us. So the rising in premium is a function of the fact that supply is limited at best and demand is off the charts. Rising premium is nothing other than a real function of an exponential increase in demand. When we look at what is available right now, it's becoming fewer and further between. We have to go further out. We have to talk about delivery delays. We have to talk about 4, 6 weeks. There are things that are available right now, but when we sell out of them, what does that mean? And as we draw closer to the February 24th delivery delay date on COMEX, I am convinced actually that we will see two things: volatility and increased demand. And, look, I'm not able really to look past 2, 3 weeks any longer, because when we sell out a product, getting stuff is not only a continual challenge, but the uncertainty, the shroud of uncertainty that surrounds it is getting to a point that I've never seen. Normally, I'm able to book things out a month or two in advance. Now, when I spoke with one of the largest distributors in the world about that, he said to me, listen, I can get you something. I don't know if it'll be Krugerrands or Philharmonics or Britannias or Kangaroos, but it'll be something. And I said to the guy, well, how do I sell that? How do I sell that to my clients? I mean, it's one thing to say, I'll have Krugerrands in 2 weeks or Britannias in 2 weeks, but how do I say I'll sell you something in 2 weeks? I've been promised what that something is. This is where we're getting. And when you look at the online companies, they're all out of product virtually. And so this is something that is a phenomenon that this industry has never experienced, and goes back to all the things we've talked about over the past year or two, where I kept saying I felt that supply or lack thereof would be the major concern here. And while it's not quite there yet, I would say that the chances of that happening, where really supply becomes a big issue, is growing exponentially by the day.
One of the things you've brought up with us a couple of times recently was this gut feeling you get when you feel a shift in the game, when you feel that there's a sentiment change that's catching on. And one thing you just mentioned a few moments ago pushed a button for me, because you mentioned about money managers or the advisors who have been counseling people under their guidance now also reaching out or showing interest. I had 2 calls this week so far from investment advisors who counsel people. One of them has been the only one in his practice of like 10 or 15 other advisors, and he said that they've been making fun of him for years and years because he's the only one who's been touting the virtues of precious metals for all that time, and they've been thinking now they're coming to him and saying, "Gee, maybe you knew something. Maybe we should have listened to you." That kind of thing. And then I got a second one who called me and said, "Hey, I've got some clients and I need someone I can trust to send them to. I'd rather send them to you where they can get personal private service rather than just an online dealer." So it's like, that's a big change. That's for me. And again, my exposure is less than yours, but you say you're seeing that as well.
It's a huge change. It's a massive change. Most financial advisors will tell their clients that the road to retirement is paved with mutual funds and stock certificates. And for the past 2.5 decades, it has been. But things are really changing right now. And I think when people are looking to have a modicum of protection, of safety that's outside the system, there are very few places to look any longer. And, it used to be you could find safety in the bond market. Well, you don't see that any longer, with interest rates in real terms already negative and probably trending even lower in terms of nominal terms. And so when you realize that the dollar's in trouble, that the equity markets are overvalued, that the interest rates are manipulated, therefore the bond market is arguably in the biggest bubble of all, the lowest interest rates in human history, we get into an issue where do we put our money? There's cryptocurrencies, of course, and they've done very well. But, that's a relatively new phenomenon. A lot of people don't feel comfortable there. And in looking to precious metals, what always was available and what always was a piece of cake no longer is. And I think those people are going to realize that as they become late to the game. And I keep harping on the same thing we've talked about before. Rick Rule talking about a 0.5% allocation prior to 2020 across the entire matrix. That number is increasing. And maybe it's 1% now of the entire population having a 1% exposure on average to precious metals in their portfolios. But that's a doubling of demand. And, as Rick says, over the last 30 years, the mean has been what? 2.5%, which would be a 5% allocation, but 2.5% is nothing. 2,500 per 100,000 is nothing. But the point I'm getting at is that the supply demand imbalance right now is showing that this is happening, that we are regressing. We are increasing our exposure to physical product across the entire gamut. And people who have never been open to it now are. And I think as the older people are getting to the point of retiring, the safety normally would have been transitioning into the bonds. Well, when you're looking at interest rates at or near zero on a bond portfolio, it doesn't inspire much in the way of utility in terms of an income stream. So when you look at the opportunity cost in buying precious metals, which provide a lot more than just safety from catastrophe. I mean, I would argue that it's important to have it in any portfolio, period. But when you look at that, the traditional argument against it is that they don't pay a coupon. There's no return. People are looking past that now because it certainly beats a negative return that we're seeing on a 10-year treasury when you look at real terms. So
or dollars in the bank is the same thing, negative real return.
For sure. And I think so the advisors maybe for the first time are saying, well, you know what, maybe it's not a bad idea that we look this way. So you can also see it in terms of the inflows into GLD and SLV, record inflows into GLD and SLV. The awakening, I think people looking to precious metals with a portion of their portfolio to protect and to add some non-dollar denominated exposure is growing, no question about it. The only problem with it is that at the same time that's growing, the supply seems to be becoming less and less and more tenuous. It's a full-time job for us to continually scour the entire world when we're talking South Africa, Australia, Austria, the United Kingdom. We're up in the middle of the night contacting our distributors to continually upfront pay the money up front a month or two in advance and beg for product. And thankfully for the last 15 months, that's worked. But I'm telling you, it's getting harder and harder and harder. And when I talk to the largest distributor in the world who tells me, well, I don't know exactly what I can get you, I'll get you something. These are things that I've never heard before. When I talk to a different distributor, equally as large or pretty close, who tells me they can't get 1,000-ounce bars until March, two things come to mind. One, it's very, very, very tight. And two, this is a COMEX depository. Makes me feel as though this COMEX depository is bracing for a squeeze here at the end of the month. There's a massive open interest into the end of the month on the 24th when the delivery month starts for February. They can start taking delivery. Huge open interest. So that's one reason I expect volatility, because remember last year I kept saying one of the big changes was this others reportable group on COMEX that keeps draining the COMEX through taking deliveries. Well, there's huge amount of open interest right now. And I think that the commercial banks are going to try to shake those people free so that they don't stand for delivery. But here again, I think that's where the volatility comes in. But it goes back to the same thing we saw in 2020. A common thread that I've seen for 4 years of big money, huge money, sovereign wealth funds, family offices, commercial banks, and central banks all pulling metal home, taking delivery off of the exchanges, off the Bank of England, off the New York Fed, and off the COMEX. So it starts at the top and trickles all the way down. When a huge distributor tells me, A, I can't get 1,000-ounce bars till March, and B, that my cost on them is 3 times higher than it's ever been. 1,000-ounce bars are things that I took for granted. I could have gotten anyone as many as they wanted without second thought like that. Now, I said, if I want a $10 million deal, how fast can I get it? He says, I'll get it to you in March. We're making them now. He owns a refinery and a depository. So he's making them. There are none on the shelf that he can sell me. And he says, well, I can't get a truck till March. I don't believe that. I mean, you can get a truck tomorrow. point of it is that the cupboards are bare. They're afraid of a potential short squeeze on COMEX, where people say, "Give me, give me, give me," and there's not enough bars. You can see SLV is concerned about that as they've changed their prospectus to talk about this. The big money is getting nervous because the big money sees a common thread of removal of counterparty risk by standing for delivery and taking possession. So it starts at the top and it trickles on down to where we are, where it's almost impossible to get coins. Look at the U.S. Mint, gold and buffaloes and eagles. They're impossible to get. Premiums on gold buffaloes are almost 10%. That's almost 3 times higher than we were selling them for a year ago, premium wise. So everything is becoming challenging in terms of this environment. So, it's hard to try and convey something and be authentic about it without sounding like I'm trying to peddle my wares. Then again, honestly, if I can convey anything to people out there, it is that my belief of a supply chain that is getting more and more tenuous is as authentic as I can be, because I'm telling you, literally, my head trader spends 24 hours a day, portion of every day, morning, noon, and night, trying to shake loose as much product as we can from the distributors and the sovereign mints. And it's becoming much, much harder. So, and you see that high premiums that everyone's charging and the delivery delays that everyone is posting.
One thing that people have been asking me about when they do call up to say, well, what can I still order? What is still available? There really are these kind of like 3 tiers that it tends to sort into, as far as the really high premium products, which are typically the most popular sovereign mint coins that you're describing. And then there's like the rounds and small bars in the middle that have kind of still higher than average, but below the premiums that are on those sovereign mint coins. And then there's the large bars typically that you're describing, typically carry the lowest premium. It seems like all of them are higher than they used to be, and the differences between them, there just isn't anything that's just really low premium anymore. Well, the question people are asking for their strategy is, does it make a difference when they're picking what to get, whether they're planning on trying to use it as an investment to try to play a silver increase and then just sell it back a year from now or 6 months from now or something or whatever, versus saying, I just want ounces and I want to hold it long term. I'm not in it to flip it or invest it. I'm in it to gather ounces. Is there a difference in the way that their goal, their objective would inform which of those higher, middle, or lower premium ranges would make more sense for their strategy?
Well, normally the answer is yes. But now, as you've noticed, the difference between a 1 ounce round and a Vienna Philharmonic is almost moot. And it never was that way. The difference between a 10 or 100 ounce bar and a Philharmonic or a Kangaroo is almost moot. It may be 25 cents. It used to be $1 or $2. The demand for everything has gotten up so high. And when we talk about the rounds and the bars, those are made by private refiners. They can't keep up. And their premiums are higher than I have ever seen. Mm-hmm. And so normally I'd say, yeah, you buy silver bars or even junk silver. If you remember, we were promoting junk silver, mm-hmm. and we were selling it at $1.39 over the price of silver. Now it's going to cost you $4 above that. And every single company in America is 8 or 9 above. We're at 5.5 or 6. And I have some. But here again, the point is that when I sell out of it, where do I get it? No one is selling it to me. I look and see what the distributors who have a little bit, they're selling it to me higher than I'd have to pay almost as much as what I'm asking for at retail to buy new stuff. And so that's really the point, is that we all have this same issue. If we're trying to get stuff into sell, and we have to pay huge premiums, and we have to think, is it worth it? We can't hedge it. It's the same thing for the people out there trying to decide this. I guess if it were me, I would focus on getting right now things like the Philharmonic, the Kangaroo, the Krugerrand, because they're all going to be just a few cents above the silver bars. The silver bars to me are not a good value right now, nor are the silver rounds, because you're paying almost the same price for the 1 ounce coin. So what you said always was true, but that is being blurred right now. It's like, what's an ounce of silver worth? And what the markets are saying is that an ounce of silver is worth at least $5 higher than the COMEX says.
Yeah.
Because you can't buy anything 1 ounce right now, really, for under $5 over the price of silver. And that includes 1 ounce rounds. And that even includes 10 and 100 ounce bars by and large. across the entire industry throughout the United States. So I guess you try to maximize what you can get, but always try to remain as flexible as possible. If you're able to get 100 1-ounce pieces instead of a 100-ounce bar, you're always better off, especially if the savings is really mitigated by, or I should say, is only what, 20, 30, 40 cents an ounce, 20, 30, $40 per 100 ounces. You're way better off buying a sovereign mint coin like a Philharmonic that we've been selling for right around $5 over the price of silver for the past few weeks, somewhere in that neighborhood. It's where you'll find 10-ounce bars and 1-ounce rounds. These are things I've never seen before. I'll also like to mention that we're selling those coins cheaper than junk silver. Never seen that before either. There are anomalies everywhere right now, and that all has to do with the distortions that we see through a manipulated price. And so, look, get the biggest bang for the buck. Don't be penny wise and pound foolish, and don't buy 1,000-ounce bars with a delivery delay just because you think you're saving some money. When you want a snack, you don't need an elephant sandwich. I think the best thing to do would be to get 1-ounce pieces still that are going to be not much of a cost above the 10-ounce and 100-ounce bars. To me, it's a no-brainer.
You mentioned a delay, shipping delays or whatever. That's a big thing right now. First, we had, as you were painfully aware of in the Minneapolis area, a social unrest going on for half a year. And now we've been having this terrible winter storm gripping most of the country. So shipping is just really, really impaired. We've had people, this I was going to get to is forms of payment and forms of shipment. The method of payment that people use can really affect how long it takes to get their order shipping out. If they send, the slowest is if they send a check, because it takes, you would think in a good world it would take 3 to 4 days for the check to get in. We've got one that we're waiting for 2 weeks and it hasn't gotten in yet in this weather. So that's one thing, is forms of payment that are fastest to get the order dealt with, and then how quickly we're able to then turn around and ship the product after receiving. So in this climate, literally and figuratively, what do you recommend people should consider if they really want to make sure they get their hands on their metal?
Either use Bitcoin or a wire. Those two things we can more or less ship really, really, really quick. We have product in stock, but speaking of the weather, all of our imports, and we bought a lot of Britannias, Philharmonics, Kangaroos, and Krugerrands, and those are the things that we focused on at the beginning of the year, and fortunately have a whole bunch in and coming in too, to where, I think we're as well stocked as anyone in the industry. What's going to be a month or two from now, I'm not certain, but right now, fortunately, we have product to sell. But as to your point, it was all supposed to be in our warehouse a week ago Monday, but due to that storm, when it all came in on the East Coast, it comes from Massachusetts, they wouldn't let the trucks drive across the country in a blizzard. So they all came in yesterday. We got 2 truckloads yesterday. We have a massive influx finally of supply people have been waiting for, and it was because of the weather. There are all sorts of these things since 2020, delays and supply chain breakdowns, and I don't see them getting any better, to be honest with you. Irrespective of COVID, there's so much demand right now, the mints can't keep up. And there's more than just 1 or 2 companies vying for the limited supply that's coming in. So yeah, I think if people want things quickly, the best way to do it would be to send a wire. We do accept Bitcoin. I believe, finally just got our limit increased, where we were only able to take 100,000 in Bitcoin per day. Now I think it's pretty much unlimited. So we're able to do Bitcoin for people. Checks and ACH are fine, but that's going to take 10 days to clear due to the proliferation of identity theft. So, mailing a check, if you're going to mail it, send it overnight. Pay an extra few bucks to put it in a priority envelope or FedEx it. But there are no ways around a clearing time, a normal clearing time of 7 business days, 10 days for us on all checks and ACHs. So, but if people want things quickly, we have Philharmonics, we have Krugerrands, we have Maple Leafs, we have Junk Silver, we have some stuff live. We also have a bunch of stuff coming in on this coming Monday. So we have Silver Eagles also. But if you want it quickly, a wire is going to be your best bet 9 times out of 10.
We just have time for maybe 1 or 2 questions from viewers before asking about a weekly special. Jocko John asks, can you explain, because you mentioned it earlier, how you, quote, hedge when selling your precious metals so you have a net neutral position? I'm a beginner in learning how this works, and it'd be a good thing to understand. Maybe there's someone else out there who would benefit too.
Yeah, well, if we have 100,000 ounces of silver in our warehouse, that means we're long 100,000 ounces on physical. We will sell short on paper on COMEX 100,000 ounces. So if I have 100,000 here, that's long, and 100,000 on paper, they will always move inverse of one another. If what is in my warehouse goes down by $10 on 100,000 ounces, that's $1 million loss. But it would be up the same exact thing on what I sold short on COMEX, allowing us to remain market neutral in our inventory. And so that's why if you speculate as a dealer, you go out of business. So if we sell something and the price goes down and a client says, well, can you give me a better price? The price fell. The answer is no, because we have it hedged. We have it hedged. So what the lesser price on our inventory is commensurate on the other end, and vice versa. So it's just a way for us to always be market neutral on our inventory. That not something you're going to do with your physical position that you own in your home, but with inventory, it's a necessity. We take the opposite side of the trade on paper to every ounce we own and unwind it as the funds come in for an order. So it's every business in the country will do that, the large ones. This is a reason why the small coin shops really don't like taking in large orders from the public, because they buy that before the person leaves. If the price falls, they're on the hook. Whereas they could call me and say, I want to sell this to you. Now we will hedge that position immediately. In other words, I will assume the product's coming to me. It's in my warehouse even before I see it. I'll sell on paper the exact same amount so that I will be market neutral. If one goes down, the other goes up. One goes up, the other goes down. Hope that was clear enough.
I think it is for normal cases, but you were describing a couple weekends ago when all heck broke loose over the weekend that you ended up in an imbalanced position. Probably people were wondering, how can that happen? What's different about weekends?
Well, because the market is closed from Friday at 5 o'clock here in Minnesota till Sunday at 5 o'clock. And so the market is sleeping at that point. And so we have to make a decision. Do we want to extend our open position into the weekend? So what we did a couple weekends ago when we closed is we bought 11 futures contracts, or 5,000 ounces per contract. We were 55,000 ounces long. And we were okay with that because everyone expected the price to move up. But what happened is that we sold 90,000 ounces by Saturday morning, which meant we were 35,000 ounces naked exposed to the open, meaning we committed to 35,000 ounces at a certain spot price. And if the price were to open up higher and we didn't have that covered, now we have to lock that in order to deliver that price. And it gapped up a little bit. It cost us $40,000. So that is why everybody closed on the weekend, because they did not want to be naked exposed into a position that they did not have hedged. The inventory may have been hedged, but every time you take an order, we have to do a new hedge because it's an order. It's not our inventory. So we take it out of inventory, hedge that position on what they're going to buy. And so if the market opens up and we have all of these open orders committed at a certain price, we are now out that money because we have to then go in and re-hedge it at that price or fix it to a higher price. It's a little bit complicated, but let me just simply say this, that the 11 contracts that we had that allowed us to sell 55,000 ounces, I was okay with that because we were hedged long. So I was all right. But once we breach that, now everything we do is just on our word. And if the price opens, we're going to lose money because everything we have is hedged at a lower price. So it just means that it's a gamble we had to take. And at a certain point, after 35,000 ounces naked exposed, at that point, we didn't want to take any more risk. And as it is, it cost us over $40,000.
We have a question here from Angel Soul who says, we are told that owning precious metals is an anonymous venture. Certainly a lot of people do that to get some more privacy on their financial lives. But when ordering from dealers and having them shipped, have to pay using methods that leave paper trails. So is buying precious metals really anonymous? Talk to us, if you could, just briefly about the privacy aspects of how to increase that.
I mean, yeah, it's private. It's as private as anything is going to be. There are no reporting requirements by and large by the dealer. Once you own the metal, there's no reporting. You can buy it and bury it in your backyard, and for the next however many years, no one knows that you own it. It is private in a world of decreasing privacy. In theory, people could pay with cash up to $10,000 with no reporting. And But look, there's always going to be some sort of a paper trail, mailing it to the client. In a world of decreasing privacy, this is one area that offers you the most privacy there is legally. When you buy an investment, as an example, through a brokerage, they're going to issue you a 1099 every year. They're going to file to the IRS every year on your behalf. And so that doesn't, and that's the same thing with a bank account, with any type of insurance program that's throwing off income. They're going to report that annually. The only loss in privacy in and of itself in buying metals is what he said, writing out a check or sending a wire. Short of that, that's where the reporting requirements or the loss of privacy ends. It's as private as you're going to find. And so, you received the metal, you wrote out a check or you sent a wire, and however many years later, it's in essence invisible. Whereas every single year, the brokerage that you have a relationship with is going to file a 1099. So while, there really isn't anything completely anonymous, it's going to give you as much anonymity as you could ever hope to find in any investment, especially one that you plan on keeping for an extended period of time.
One thing you said there I wanted to make sure we clarified, and that is that when the dealer sells metals to a client, there's no reporting necessary. There are some cases if a client is selling metals back to a dealer, not always, but in some specific cases, in some specific quantities, that transaction may be reportable as a 1099. I can put a link in the description of this video to that. It's a fairly short list of types of metal and quantities that the IRS says the dealer needs to inform them if people sell them in that quantity.
Right. That's exactly right. And so silver, it's very easy. Anything in 1 ounce rounds or bars or any rounds or bars that are not government issued, like 100-ounce bars, 10-ounce bars, or generic Buffalo rounds. If a client sells more than 1,000 of those back to us at any one given time,
1,000 ounces total.
1099. Yes, 1,000 ounces. If it's under that, that's not the case. But if they sell us 1,000 ounces, there will be a 1099-B miscellaneous income form signed, and the same thing, or sent. And the same thing is true with a bag of junk silver, $1,000 face value. Any amount under that in one transaction, there's no reporting. Client could sell 500 ounces every week for the rest of his or her life, and there's no reporting if they're bars and or junk silver. It's just that threshold on one transaction. Nothing else triggers it. No maples, no eagles, no silver dollars, nothing else triggers it but those two things: bars, rounds, junk silver. And on the gold side, there are 4 items that trigger it on the 25th ounce in one transaction: maple leafs, Krugerrands, Mexican 50 pesos, and gold bars. Nothing else triggers dealer reporting on sellback ever. If you sell over 24 ounces in any of those 4 items on one transaction, a 1099 is filed. Nothing else does. So there are some reporting requirements. Most items don't carry any reporting requirements. And if you pay with a check or a wire or an ACH, there's never any dealer reporting requirements on the purchase side either. So here again, it's going to offer you as much privacy as you can legally find nowadays in terms of an asset or an investment.
Okay, so now we want to give you a chance to talk about a weekly special in the midst of this high demand season. Well, there's a lot of things that are hard to get, but we've got stock of some things, and those you're going to mention.
Yeah, and it's been really hard to offer a special. Last week we didn't even do it because product has been so hard to come by. And, when I mentioned this special, I almost, it's really almost hard for me to say it because the premiums are so high. Silver Canadian Maple Leaf is what we're going to offer on special today, Dunnigan. And I feel strange even offering it at the premium that I'm going to, because for my whole career, it was always under the $3 an ounce over the price of silver, $2.80, $2.90, somewhere in that range. At $7 over the price of silver, I am cheaper than any major company in the United States for 2021 silver maple leafs. I have 35,000 of them in stock. We're going to offer them that at $6.99 over the price of silver right now, as long as we can, for at least for the next week, and until we sell out of them anyway. And again, this is what we've been talking about. Most of the online dealers are going to be $1 to $2 higher. We're going to do this at any quantity, for your listeners. Any quantity at all, $6.99 over 2021 silver maple leafs. But this is what I've been talking about for the last several months with you about rising premiums and difficulty getting product. Nowhere is that found better than in the silver maple leaf or the silver eagle. So I'm sorry the premiums are so high, but I'm happy to say we'll be the best price in the country on those at $6.99 over any quantity while supplies last.
Well, thank you for that, and we'll put a description of that in the video description, guys, and make sure that you follow the work. Miles Franklin's been cranking out a lot of educational videos, too. They have their own YouTube channel. We'll put a link to that as well. But also make sure you sign up for our free newsletter. Go to libertyandfinance.com. Over in the left-hand column, put your name and address, email address. We'll get you on our free newsletter that comes out with all of our guests, all of the links and descriptions of all of our videos. And also check us out on Brighteon and on Rumble. So Andy Schectman, CEO of Miles Franklin Precious Metals, thanks for joining us again.
Hey, Donnegan, it's always a pleasure to be here. One last thing. Let's not forget, not only are we trying to offer the best price in the country, we're the safest company to work with in the industry. In 31 years, never had a customer complaint. And one of the only companies in the United States as a major retailer that is licensed and bonded thanks to the regulations in the state of Minnesota. So best price, hopefully the best service, and the safest transaction, bar none. So thanks for having me. I appreciate it, and hope to see you again next week, same time, same place.
Thanks, Andy. If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.